In today's video, I'm going to walk you through how stock market investing works, especially if you're just getting started. We'll cover the basics, what stocks actually are, how to begin investing, how people build wealth through the stock market, and which types of stocks are generally better for beginners. Let's start with something important. The stock market is not as complicated as it sounds. Think about it this way. Imagine you own a business and you want to grow it. Maybe you want to hire more employees, open new locations, or develop better products. To do that, you need money. One way to raise that money is by bringing in investors. The stock market exists for this exact reason. When a company sells stock, it is selling pieces of ownership. Each share of stock represents a small part of the company. So when you buy shares of companies like Apple, Microsoft, or Tesla, you're technically becoming a partial owner. You don't own much, but you do own something. That's why these companies don't belong to just one person. They belong to millions of shareholders around the world. Now let's talk about how you actually start investing. To buy stocks, you need a brokerage account. This is simply an online platform that allows you to purchase and sell investments. Once you open an account, you connect it to your bank, transfer money into it, and then you're ready to start investing. The goal is to buy shares in strong businesses. When a company performs well, its value tends to rise. As the value rises, the stock price usually goes up too. That's how investors make money. On top of that, many companies also pay dividends. A dividend is when a company shares a portion of its profits with shareholders. The best part? You don't have to do anything. The money just gets deposited into your account automatically. That's true passive income. Selling stocks is just as easy as buying them. You can sell whenever you want, maybe because you need cash, maybe because you no longer believe in the company, or maybe because you found a better investment opportunity. After you sell, the money stays in your brokerage account, and you can either transfer it back to your bank or reinvest it. Now let's talk about how people make money in the stock market, because there isn't just one approach. Some investors use the buy and hold strategy. These people buy stocks and hold on to them for years, sometimes even decades. They believe in the long-term growth of great companies and don't worry about short-term price movements. Others are traders. Traders try to profit by buying and selling frequently. They focus on short-term price movements rather than long-term company growth. Trading can be profitable, but it requires experience, discipline, and strong risk management. Beginners should be extremely careful with this approach. There are also speculators. Speculators invest in smaller or riskier companies that have the potential for massive growth. Sometimes this works incredibly well. Early investors in companies like Tesla or Amazon made huge returns. But speculation can also lead to heavy losses, so it's important not to bet too much on a single stock and never let emotions control your decisions. Then there are dividend investors. These investors focus on building a portfolio that generates consistent dividend income. Many of them reinvest their dividends automatically using a system called DRIP, Dividend Reinvestment Plan, allowing their investment to compound over time. This is one of the most powerful long-term wealth-building strategies. There is no single, correct strategy. The best approach depends on your goals, personality, and risk tolerance. What matters most is that you understand the pros and cons of whichever strategy you choose. Now, what types of stocks are best for beginners? When you're starting out, it's usually smarter to focus on large, established, financially stable companies. These businesses tend to be less volatile and easier to understand. Smaller companies can offer higher rewards, but they also come with higher risk. As a beginner, your priority should be learning how the market works without exposing yourself to unnecessary losses. The stock market is not a get-rich-quick game. You want to approach it like an investor, not a gambler. It's better to grow slowly and consistently than to take huge risks and lose money early on. If you want even more safety and diversification, you can consider index funds. An index fund is a collection of many stocks bundled together. Instead of betting on one company, you're spreading your investment across dozens or even hundreds of companies, which significantly reduces risk. One of the most important rules in investing is this: always do your own research. Before investing in any company, ask yourself, what does this company actually do? How does it make money? Who are its competitors? Is the business growing or struggling? Is the stock fairly priced or overpriced? Treat it like you're buying a real business, because in a way, you are. I hope this guide helped you better understand how stock market investing works. If you want to see what I'm personally investing in and access exclusive educational content, you can check out the link in the description. Thank you for your support, and I wish you success on your investing journey.